Hey everyone, it's Jeff Trapp here with the Tax Planning Pros and the Jeff Trapp Podcast. And I'm so glad you've decided to join me today. We are coming up on that April 15th tax deadline. So if you have a tax return that is due as an individual, which you probably do, want to make sure you get that filed or extended. And same if you have a C corporation. Now, today is part two of the IRS Dirty Dozen tax list for 2023. These are the things that the IRS is going after, looking at when it comes to your taxes and, some fraudulent things that are out there this year. So if you didn't listen to last week's episode, I highly encourage you to do so because that was part one. Today, we're going to go through items 12 through 12 on the list. I'm going to read the items on the list just because I can't remember them all and they change every year, but I'm also going to talk about the things that have gone away for this year. So super excited. It's one of my favorite podcast episodes that we do every single year. So number 7 on the list that the IRS is going after is social media and fraudulent form filing and bad advice. So if you're into those TikToks and Instagram reels and, Facebook posts about certain tax strategies, buyer beware. You need to be careful. They're not always legitimate. Some of the things that folks say on Instagram, TikTok, and social media is to get you to opt in to use their services so they can help you implement the strategies they're talking about effectively. We found that people take some of this advice and have their own interpretation, really mess things up. So the IRS wants to cut down on inaccurate and misleading tax information on social media and make sure that you file the correct forms and the correct documents. Scammers or schemers will use forms to submit false and inaccurate information in hopes of getting a refund. So forms you need to look out for, such as Form W-2. Everybody gets a W-2. There's certain things you can do there to manipulate things and get tax credits. And, seen that on TikTok. So be careful. And obscure forms, which is a Form 8944, which is a prepare e-file hardship waiver request. Some people think if you file your returns by paper, right? The IRS algorithms, I'm going to pick certain things out. IRS is catching on to that. So they're going to review those returns a lot more in depth. So number 8, spear phishing and cybersecurity for tax professionals. Oh, this is a huge one. Like we mentioned last week, phishing emails, text messages are designed to get users to provide personal information. Spear phishing is a phishing attempt tailored to a specific organization or business. The IRS wants tax professionals about spear phishing attacks to steal client data, the taxpayer's identity, allowing thief to file fraudulent returns. Now, the IRS did release new prepare cybersecurity requirements last year that every taxpayer, tax strategist, CPA, anyone who prepares tax returns must follow these FTC safeguards and rules. Your staff has to be trained on all of these issues on a monthly basis to stay compliant. Luckily here at the Tax Planning Pros, we are compliant. We are, everything that we do is, heavily encrypted and managed by cybersecurity professionals. And we pay an arm and a leg for that. And I know a lot of firms and a lot of colleagues are just like, that's too much money. I'm just going to go out there and risk it. And, that's scary. So you want to make sure that your tax professional is following these IRS safeguard rules. Number 9 on the list is offer and compromise mills. You always hear those commercials on the radio. Oh, settle your tax debt for less than you owe. And a lot of these quote unquote mills, right? They, promote paying less than you owe. They charge a high fee up front and then boom, they're not able to get the result that you're looking for because, after they do the personal financial statement, send on all the documents, and it's a lot of documents, and you go through the whole process, the IRS will come back and say, oh, you don't meet the qualifications. You don't qualify. And so you're paying a lot of money upfront out of pocket. So you want to make sure that you qualify before you get engaged or spend a lot of money on this. Now, a lot of times the folks that we refer out to will require a small retainer upfront to see if you qualify because it does take them a lot of work to see if you do. And that's okay. But if you are looking to settle your debt for less than you owe, we've seen taxpayers come in and pay companies, $20,000, $25,000 to no avail. And that really stinks. But to pay, $1,000, $2,000 to get your data analyzed to see if you qualify, that's a little bit less of a hit. Number 10 is schemes aimed at high income tax filers, right? Everybody wants to pay zero in taxes, right? And so there's a lot of uh, schemes or these things that seem really, really sexy. Then if you're a high income W-2 earner or a high income business owner, you're looking for that edge to pay the least amount of tax possible or 0%. Very, very, very hard to pay 0% in taxes. We do our best to help you keep the most of your hard-earned money, but like if we can get you down to 10% in taxes is what you're paying, that's we really consider that a win. And actually, you're kind of paying your fair share. We don't really think anybody is to the point where they need to pay 0% in taxes. Now, obviously, there's laws and carryovers and things that will allow that, but it's not going to allow you to pay 0% or no taxes indefinitely. 11, bogus tax avoidance strategies, right? There's a lot of different things out there uh, that folks do to try to minimize their taxes. And, one of the things on the list is, those syndicated conservation easements, right? Conservation easements is where you donate money to a charity or land. You donate land and you get a huge, huge write-off. The ultra wealthy typically have done this in the past, but over the last 10 years, those have really become scrutinized. So a lot of folks aren't doing that anymore, of course. And, that's not something that we talk about. Schemes, number 12, schemes with international elements, right? So offshore accounts and digital assets. So if you are utilizing offshore accounts, digital assets, be very, very wary of that. Offshore banks, brokerage accounts, nominee entities, things like that. You know, multi-individual retirement arrangements, misusing treaties. There's different tax treaties where, you get credits for paying for taxes, not credits, no tax. You know, there's a lot of different things that you can do offshore that aren't legal. So make sure that if you're utilizing something that requires international taxation, that you do your due diligence and, speak with your tax strategist or prepare out how to do that correctly. So there's a lot of things that are gone this year off that list. The first, pandemic related scams. So that was your payroll protection program money that people got that they were, utilizing to buy those Ferraris. That's gone. A lot of those people have been taken care of, so to say. Unemployment fraud, from the pandemic, they're not targeting that as much. Fake employment offers posted on social media and high income individuals who fail to file. So it sounds like the IRS, just because they've dropped this off the list, these items doesn't mean it has fallen off the IRS's radar. They just haven't made the dirty dozen list this year. So once again, I love doing these 2 episodes every single year because it gives you kind of a flavor of what's going on at the IRS, what they're looking at, what they're looking into. And as you know, the IRS is continuing to hire IRS agents. They're fully open now after the COVID pandemic. And so we do expect to see an increase and rise in notices and audits for folks who've done things improperly. So make sure that you hire the right tax strategist to help you do things the right way. So once again, I'm Jeff Trapp with the Jeff Trapp Podcast and the Tax Planning Pros. You're looking to save more money on taxes this tax season. Go down to the show notes and download your free tax playbook. And I look forward to chatting with you again next week. Have a great one. Bye-bye.